Hey guys, so welcome to another segment of this training. We have been on a journey, and today is the 19th day. Wow, 19 days. That's been amazing. This is more than 2 weeks now. 21 on the 21st day will be 3 weeks. We have been on this right, back to back every day, right? So the reason I made this 22 days so that you guys understand that trading takes time, right? I could have easily made maybe 4 long videos and then get it done, right? So I had to make it 21 days so you guys can take it little by little, right? And then you can understand. All right, so welcome to the 19th day of this teaching. We are left with about 4 days. I think we have 20th, 21st, and 22nd, right? So 3 days. Apart from today, we're left with 3 days, right? So I have 20th, 21st, and 22nd, which is the last day of this training, right? So welcome once again. So today we're going to be considering a very crucial topic, right? Seasonality. Right, this is something that really makes sense to me, right? I've really seen the power of this topic, right? If you can understand this topic, it's going to really help you with your analysis, and the seasonality helps you with equity clock. So where you see seasonality is on equityclock.com. Right, so you see the equityclock.com. So this is the home. You come to equity clock. This is where you see seasonalities, right? The purpose of seasonality, right, is not necessarily to tell you market direction, right? The seasonality charts are plotted against, plotted across 20 years, right? So you click on charts and then you scroll down and then you choose the one you want to choose, right? So if you want to study the seasonalities of doing the German index, you can check it, right? The ones I really focus on are DXY and all those things. So if you want to know the seasonality of gold, just click on gold futures, right? They show you what gold does at certain seasons, right? That is the advantage of seasonality. Although some of these charts you have to pay for them, but there are some are free, like DXY is free, right? So let us click on this DXY now, this index futures. I click on US dollar index futures. That's what you're clicking to see seasonality. If you want for currency, I can see British pounds here. You can click on that, say GBP, or you click this side forex. This chart are the same. Currency futures and forex are the same. Right, they're the same. So you can click on British pounds to get the seasonality. You can click on euro to get the seasonality. You can click on Canadian dollars. Click on Swiss franc, which is this Switzerland currency. Right, so you can see all this. You can see yen. I don't think yen is free. You have to pay to access yen. So let's click on dollar index, or let's use dollar index, and then also look at euro charts. Right, this thing helps you to know what to expect. Now this is what the chart looks like. You can see the seasonality is plotted against what months, right? I can see the time frame is 20 years. So from 2013 down to 2023, this is the chart plotted against across 20 years. So you're looking at 20 years movement, right? How has this chart been moving for the last 20 years? You can see the time frame 20-year range ending 2021. So this whole stuff is across 20 years. So they use the chart of January from 2013 to 2023 to plot this. So we can have a picture of what the chart has been doing across the last 20 years, right? And then you can see the relationship towards the S&P, right? You can see down the averages. So you can see the monthly averages for the last 20 years. You can see that across these months, right? Dollar usually have the highest drop in December. You can see that December is minus 0.7%. So across the last 20 years, I usually see the highest percentage of return the highest negative return in December. That means the dollar drops the most in December, right? It drops the most in December, right? Then if you look at gain frequency, you can see all of that. So you can always compare all this, right, to actually have a picture, right? So dollar usually drops a lot in the month of December, right? That is and then it gains most in the month of May. I usually see bullishness in the month of May, and you can see the minimum return in the last 20 years. The last 20 years, the lowest return was I think in May we have minus 0.62%, and then December too. So we had that in 2069, and then You can see the months that had the lowest return. Then you can always go through all this. But where I mostly pay attention most is the chart, right? So now this chart tells me what to expect for this pairs, right? So now I can see that in the month of December, we usually have a very sharp drop in the month of December. For the last 20 years, we have been seeing a drop on dollar index for the last 20 years in the month of December. Month of November is usually bullish, same as October, usually bullish at the beginning, and then at the middle, you see some kind of drop down, right? Then September really a rally up and then a drop down, then a rally up. So now I want to say something, right? I want to point out something. Seasonality is not financial advice, right? Seasonality is not financial advice. That means it does not always play out to the peak, right? So it's not financial advice, right? It's not a financial advice. So that means even if dollar is suggesting bearish seasonality on this equity clock chart, right? It's not a reason to just go short, right? Because market can still reverse. Remember that this thing is for 20 years, right? It's not one year. So it might not be so accurate like to the peep. Sometimes you might have bearish seasonality and then the market will be bullish for a while, even when the market is supposed to be bearish. So the market is always unique, right? The market is always dynamic. The market is always dynamic, and that is why it's very crucial that whenever you're looking at seasonality, you also have to compare the market structure of the charts, right? So always compare the market structure before doing anything because the seasonality might be bearish and the market can still choose to buy, right? It's not always like exactly precise, right? I have to state this now because some people will take off with this information and just start running with it without understanding the logic behind it. When I learned about seasonality for the first time, I thought that it was just the holy grail because I studied it for a while. I could see that it was kind of adhering. So whenever I saw seasonality, I would just want to rush and buy. Even when the market is not ready to buy, I'll be trying to buy the pair, just trying to buy it because I was of the seasonality. Right. So now let's go back here. So you can see the seasonality. Right. So let's now compare this with the real charts. Let's compare this with the real charts. So let's look for DXY. Right. Let's use DXY. Let's use capital.com. Let's go to the daily charts and then bring it on. So let's zoom out. Let's compare the year 2023. Let's also not use this. Let's use the 2023 for this comparison. This is the dollar index. Let's do a little comparison and a little study. So this is 2023. So let's mark the beginning of 2023 and the end. So this is the end of 2023, somewhere around there. This was the end of this is the last day of 2023 here. This is the last trading of 2023. And then let's mark the first day of 2023. All right, so this is the first day, so somewhere around there. I think I need to scroll here a bit. All right, so somewhere around the let's also mark that place. Let's also mark it. Should be somewhere around there. All right, so this is the first day of 2023, somewhere around there. Okay, first day was on 10th of January. All right, so okay, there was no market on Monday. All right, so this is the first. This is the comparison now. So let us pick some months that are very, very clear. In the month of May, that's usually what a bullish market in the month of May. So let's look at what happened in the month of May for 2023. Let's look at May. This is May. Can you see May? What happened in May? Can you see that from the beginning of May, did we have a bullishness? Yes. So markets make it that bullishness, which we are expecting. What do we see next? In the month of June, usually a drop and then kind of range, right? June is not always direct. So we can see how June was. This is June here. This is the beginning of June. Can you see how June is? So June is not really that direct. You can see how June was consolidating around here and then finally it dropped and then it dropped. So you can see how June and July dropped. You can see how June was and then July also dropped too. Right? You can see how July also because this is July. You can see how July dropped. This is July. This is July. This moved down in June, July, right? But you can notice something that early June, July, there was a bullish rally, but early July, there was no really bullish rally yet, just a little move. So you can see that seasonality is not like perfect. It just gives you like direction, what to expect, especially seeing that we had this liquidity resting here, this liquidity resting here, this liquidity resting here, right? So had this liquidity resting here. So it made sense for this to drop because this relative equal lows here. And then if you see the seasonality here, you can see that it made sense for what this guy to drop in the month of July, right? And to take out this liquidity pool here, right? So that is basically how dollar this seasonality plays out, right? You have to always compare it with um the market structure, right? Let's look at the month of January. So January to February usually was bullish, like relatively between January and February, usually see was bullish price action. Let us look at January and February. So can see January drop first. Can you see that? But then at the ending of January, we saw what February finally was pushing up. Where did it push above? Above this liquidity high here, right? You can see how this is aligning with market structure. You had a drop down. Okay, there was a dollar in January before the bullish push. So we saw that dollar in January before the market finally was pushed higher. So the market actually dropped down before it finally was pushed higher, right? So that's how this thing occurred. Let's look at one last month and then we'll wrap it off for DXY. So let's look at the month of September. So September, relatively, September to October is really bullish. Like relatively, you can see that relatively they're overall bullish between September and October. So let's look at September, October. Really some relative bullishness, right? So September is here. I use September here. All right, so you can see September here. This September, yeah. So you can see September. What do we see first? We see what September usually gives a high, then drop and then continue going higher, right? So what do we see? September get that bullish push, right? Can you say September was relatively bullish? It did what? It dropped a bit, right? So October is okay bearish. So October, I can see October too. October was here. Can see October. October is bearish at the beginning. So watch this. You can see October here. You can see October. So October, you can see that drop, right? Just like October suggests, so you can see that drop, and then lastly, finally goes back bullish entering November. So you can see the drop again. You will see bullishness again, yes. You can see how this, although November did not play out nicely, you can see November, but did not really pan out as we expected. But November was usually very, very bullish. But you can see how November in this particular year did not do that. So I see November here. See November here, you can see November did not really buy as we wanted. Right? You can see why it's always good to consider market structure. You can see November did not really push higher, right? You can see how it's instead it dropped. That's why you should always consider market structure. If there's no reason to buy, then don't buy because market was taking out to lows. So this means that market was bearish around here. All right. So let's look at another one. Let's look at the final one, which is let's look at the pound, right? The British pounds chart, right? Let's quickly look at pounds. Now, let me know something. You know that don't forget this. You know that if dollar is supposed to be, you already know the relationship between the pairs, right? You know that if DSY is bullish, that means what Euro USD will be bearish, right? You already know. You should know this already. You should know this. That if dollar index is bearish, Euro USD should be bullish because dollar index is the opposite of Euro USD and GBP USD. So any pair that has this is mostly used for Euro USD and GBP USD. So any pair that these two pairs are the ones that we usually use to compare it. So these two pairs are what we look at. So if Euro USD is really is bullish, they expect dollar to be bearish. If GBP is bearish, expect dollar to be what bullish. So it has an inverse relationship. Meanwhile, pairs like USD CHF are direct. Something like USD CHF is direct, right? USD JPY, those are direct pairs. So inland dollar is bullish. Expect this one to be bullish too because they're direct what? They are direct pairs because yeah. So this is USD CHF. So if dollar is bullish, expect dollar to just to be bullish as well. If dollar is bearish, expect them to be bearish as well. So they're kind of direct. Why these ones are what inverse in relationship to the dollar index, right? So let's look at the pound. So you can see pound that in the month of July, we usually see bullishness. So let's just look for pound dollar, right? GBP USD. All right, so you can either use GBP USD future or use GBP USD. So let's look at 2023. What did I choose now? Let's use let me use another one. The one I'm not using. Let's use Rwanda. Okay. So let's also mark 2023. All right, this is December 2023. Let us mark any day December, right? Let's just mark any day December. Don't start looking for the exact day ended, right? This is the last of December for last year. Let's look at the first day of January too. So this is first day of January, yeah. Okay, Monday, second. All right, so let's look at July. July we saw bullishness here. So let's go up on July. Let's go July. So this July, okay. Can you see perfect? Can you see how July opened? What do you see? Bullishness. They took out this high, right? You can see how this one was very perfect, right? Now let's look at another month. Let's look at the month of April. Bullishness too. Let's look for April. Where's April? See April here. All right. So can you see April? This April. What do you see? Bullishness, right? Market run, took out this high, and then pushed before dropping. All right, let's look at the one that was bearish. So in bearish, I was already see was September very bearish, right? So a bearish September, right? So I'm not speaking 2023 because you are free to check other years. You can check 2021, 2023. Like you can check 2010, right? It's not up to so you can check 2014. It's not up to 20 years, right? You can check 2012, 2013, any year at all. So this September now. Can you see September? What happened? We saw what a bearish decline in September. What can you see how that happened as well? So September, you can say it dropped. And if we were dropping, this was the liquidity pool we're targeting. This aligns. If you combine market structure, this thing will begin to make sense to you, right? You can say it drop where to this swing low there. Very easy, right? So that is basically how to use seasonalities. You combine it with market structure to know what the market is supposed to do. Let's look at the current market action, right? To finalize this. So let's look at the market's current action to kind of give some kind of projection for this month of this is the month of June. So let's look at the month of June and see what to expect. Right. So in the month of June, we usually see what okay, a bearish decline. So relatively, June is usually bearish for British pounds, right? So if we are bearish, this is the middle of June, right? If you are bearish, it makes sense to target this low, right? Although I don't think it will do that, but it makes sense to target this low. I think we're in a bearish fair value gap here. What can you see there? We're in a bearish fair value gap right here. You can see the market is printing. This is a live chart though. Look at it. Look at it. Look at this green button here. It means life. You can see the candle is moving, right? So if we are bearish, we can expect price to drop. But we have this as our drawn liquidity. We have this imbalance here, which price should drop for. So these are areas where the market should drop to, right? You can sell from here and then target this low first, and then relatively this low here. Well, this is my first target. You want to always catch if the closest area of interest. So you're not that you want to always target the area that is closest, because market can do something like this before taking you out and then finally going down. So you don't want something like that, right? You want to catch the easy move, right? The one that is very easy, like that's easy, that easy bread and butter move. Just pop, you take it to the point, you understand? So if you want to make it really easy, just catch those easy moves. So it is very logical for price to drop to this point. Very easy. Don't need to stress yourself too much. But this low here, market might go up, down, up, down. You may have to endure all the retracement, right? So that is basically where we'll be wrapping up for today. And of course, we're running a 20% discount on our paid mentorship. If you want to join us, use the link in the description, right? It's 20% off, and it's ending on the last day of June, right? It's 20% off. Right? Use the discount code called June, and they can join us for the teaching, right? So it's 20% off, right? It's ending on the last day of June 30th. So it's ending on June 30th, which is the last day of June. So you can use the link in the description to make your payments, right? If you want to join our inner circle, now we have added crypto. Now we do crypto updates. In my pay group, usually we give the best crypto, crypto airdrops. We have added airdrops to our pay mentorship now. We give airdrops, the best ones that can print a lot of dollars, right? And the best thing about airdrops is that you don't have to pay anything. You don't have to, use so much money, right? Highest maybe just gas fee or something, right? You're getting money without spending anything. So now we are also doing airdrops, right? All our airdrops are posting it in our paid mentorship group, right? All our airdrops updates, we are posting it there. So if you want to join us, it's very, very active community, right? Where everybody is interested in the growth of others, right? So if you want to join us, we have airdrops, we have teachings, everything full of value, right? Just 20% off. Use the link in the description. So have a wonderful day. Cheers and God bless.